Hello, everybody. Welcome to the Trading with Ashley show. I wanted to talk to you today about selling puts. Now, this is such a wonderful way to trade because you are agreeing to take a stock lower than it's trading at today, and you're getting paid to agree to take a stock lower. It's almost like one of those things that after you do it, you're like, is this real? Is this too good to be true? And I have been doing this for years, and it has been very profitable for me. I was able to actually quit my job in corporate America to focus just on trading, and I love it. And I run the wheel strategy is the bulk of where I get my income. It's about 80% of my trading funds goes to this strategy right here. And I wanted to talk to you about 3 stocks that I sold puts on today for members in my community, and it's something you may be interested in doing. So I'm going to take you through all of those. But before I do, I have to give a little shout out to some celebratory things that we are experiencing within the community. So for those of you that have joined my new trader network for the Put Credit Spread Challenge, you are having a lot of fun. One of my members just reported they've already, in just a few days, made enough to pay for their first month with me. It's very exciting. We've already closed out a very profitable trade, and the other trade, it looks like it will be closing out at 100% profit as well. Now, for those that are actually in my inner circle, they are having a lot of fun as well. Take a look at this. Mandy made me so proud. She is a mom with very young children, and trading options, learning how to trade options, has allowed her the freedom to spend more time with her family. She had a goal of about $5,000 a month, and she just doubled that just this last month. And I was very happy for her. You know, it's not just about making money, it's about the freedom that comes with it. And if you have a young family and you want to spend more time with them, this is truly a godsend for those of you that are looking for an answer. Now, I want to also celebrate one of my members. He has enjoyed $411,000 profit this year alone. Very excited for him. He's a very big contributor to the community and always very positive. That's a big thing about my community. We have a platform that is very positive and very supportive. Everyone takes care of each other. We cheer for each other. We help each other through sticky situations. It's the true meaning of a community. I am heavily involved in my community. It is my life's work right now. It is my passion. I would love to welcome you into the fold. If you're interested in taking a look at the community and being a part of it, just be sure to click the link below and book a very brief call so you can take a look at the community and discuss if it's something you'd like to be a part of. The time is right now. If we are going to have a Christmas rally, this is the time right now to get into the community and learn everything you need to learn so that you can take advantage of everything the market has to offer. My returns over the past year have been well over 150% in my trading account. I am so excited to teach this to anyone who wants to learn it. The first trade I want to review with you is Amazon. Now, it is down today, but let's take a look at how it is trading. The PE ratio is low for a tech stock. It's 35 right now, so that's very respectable. Let's take a look at the analysis tab just to make sure you're getting a holistic picture of this stock. Everything checks out on the analysis tab. You see the revenue going up. You see they are a profitable company. They have been beating on earnings. That's good. They have a strong buy, and they have a higher price target than we are currently trading at $263. Now let's take a look at the technicals. So here we are. I'm on the 3-month chart for Yahoo Finance. The first thing I do is look at the RSI. We're still above 50, which means the bulls are in charge of this stock. But we have a gift at this moment, and we are having a red day. When we're over 50 on the RSI, I like to shoot right here for the middle of the band. But there's one more thing to consider. You see right here, 226. This is the 50-day moving average. That's a very fair spot to pick up this stock right now if it continues to pull back. But what I'm going to do, I'm going to go out later into the year, into December, so that I can get more premium, which further insulates me against pullbacks. But if I am assigned the shares, I get more premium as well. So that gives me a higher return percentage on the complete trade. Here's the trade setup for those of you interested in taking a similar trade. I am doing sell to open on Amazon. I selected December the 19th, the 225 strike. And this is what's so exciting. I am getting over $900 to take this trade. So I could go buy Amazon today for $233 a share if I'm bullish on it, Or I can put in this trade saying I'll take it lower and I'm getting paid to actually put up the money for this trade. So this is what makes selling options so beneficial. So if I am assigned the shares, then that's no problem because I'm getting $900 in advance. So let's go ahead and place this order. Perfect. It filled at $960, so I just received $960 agreeing to take Amazon at a lower price than it's trading at today. The next stock I'm going to go over with you is a crowd favorite. It is SoFi. The current PE ratio is 52, which is very acceptable for a tech company. Let's take a look at the analysis tab so we can get a full view of SoFi. It looks very similar to the one we just looked at with Amazon. The earnings continue to be great. They have great revenue and the earnings continue to go up. The price target's actually lower. It's at 21, and this is more in the hold category. But because this stock is going to more than likely soar when we get interest rate cuts, I feel really confident in it. So let's take a look at the chart. Here we are right here. We are over 50 on the RSI at 63, but we're not yet overextended. We're kind of in that middle part of the Bollinger Band. So if you already have this stock and you want to sell covered calls on it, I would shoot for 30, which would put you above the band. So if you get the call away, there's a good chance you could get the stock back below 30, but I would not go out more than a week. So that's important when you sell covered calls. I don't like to go out too far because I don't want to be playing catch up if the stock runs away. So if I were going to sell a put on this stock, I really like the middle of the band right here. It's at about the $25, $24.50 level. If you want it to go further out in time, and I have done this with this stock, I'd been selling the 25 strike really far out and got great premium for it. You could do that. You could even shoot down here for something around the 22 level. Let's go take a look at it and see what we can get if we go further out in time and go with something around 22 or 23. Now, this is a lower price stock, so I'm actually going to do 5 contracts on this one. I will be receiving around $1.80 per share, which is really good because that will put my cost basis just a little bit over $20. And if you preview the order, I went ahead and I executed this order and it filled at $1.83. So this is great. It gave me a little bit over $800 to actually take this trade, and I am agreeing to buy SoFi cheaper than it's trading at today. Now let's go look at UNH. Warren Buffett invested in this stock and it really pushed it higher once everyone saw that a legendary investor like him decided it was time to buy. Now let's look at the PE ratio. This one's really low. This one's under 20. So the value is there in this particular stock. One look at the analysis tab and you can see right here, you can see the revenue is very strong. Now, it appears that the earnings will continue to increase. They just put out some data on United Healthcare, and those that selected different packages, they chose the top option, which that is more profitable for United Healthcare. It is looking like it's a buy or a strong buy. The price target right now is $335, but you can look right here. The high is $626. Now, I've been looking at a lot of information on United Healthcare, and most feel like that it will, by the end of the year, maybe be at around the 450 mark. If we look at this on the 3-month chart, we are entering the overbought category. When you see this high volume bar right here, so we did have a lot of buyers that stepped in. People are starting to get more confident in this stock. And, it looks like that investors are not obsessed with getting the low with this stock, especially if there's a strong chance that it'll be much higher by the end of the year. So if you were going to go into this stock, it looks like a fair price at this point might be right here at the 100-day moving average. So you're looking at something around $315. So we're far away from that now, but let's see if we can get some decent premium if we go ahead and put a stake in the ground at around that $315 mark to take on this stock. So when you go to the option chain, there's only 310 and 320. So I will go ahead and select 320. And it looks like I will be getting a significant amount of money to go ahead and place this trade. Sell to open, 1 contract. It's a put, December the 19th, the 320 strike. Now, let me explain what this means. It shows you a gain of $1,565, a max loss of $30,435. That's only if United Healthcare does go to zero. That's unlikely with such a large cap company, so I think this one would be a fair trade to take. And that one filled at $15.70. So all in all, I've agreed to buy these 3 stocks lower than they're trading at today, and I received a good amount of money today to take those trades. Let's look at the total that I received in premium to accept all these stocks at a lower price than they are today. And here's my totals. For that Amazon trade, $959. For the SoFi contracts, $911. And then for this UNH contract, I received $1,569. So that's a grand total of $3,439 in premium. Now, I did use a combination of cash and margin for these trades, so it did not take near the amount of cash that you would think to secure these trades. That's the best part about using margin, but you must be conservative. I only use about 30% of my margin when I am using it to secure a put. I hope you found that helpful and you're very inspired. So let's talk just a little bit about risk, because risk is a part of trading. The worst thing that can happen with any of these trades that I just made is that it goes well below the strike price that I agreed to, and then I am put the shares at a price that is well above where the stock is trading. Well, if that were to happen, the stocks that I chose do have a bright future, so I just have to be patient and wait for recovery. In fact, yesterday alone, I closed out over $56,000 in profit in our community trades that we were put the shares in the earlier part of the year. So that's the beauty of selling puts. The worst thing that can happen, you actually get a quality stock, maybe a little bit higher than you bargained for, but you got paid to do it, and now you just need to be patient and wait for recovery. I wouldn't use a strategy like this on a lot of stocks that are unprofitable. That is a risk, but this is truly a really good way to make money. I hope you're inspired. If you want more on selling options, I put a beginner's playlist together for you. You can find that right here.